Hello traders, this is Yash from TFA. This video is specially being recorded for the Bold project. In this video, we'll be understanding what are pivot points. Fine. So let's start with understanding what are pivot points. So before jumping onto the pivot points, let's understand what is support and resistance. Okay. So I think by now you guys must have gone through the videos of support and resistance and you have reached here. Okay. So first let's just quickly recap what is resistance. So we all know that resistance is a point or is a point of price on a chart from where the price reverses, or you can say from where the sellers enter into the market or into the stock. Fine. How do we draw a resistance? We first try to spot the area of price where it has reversed from. So as you can see, once, twice and thrice your RBL bank has reversed from the same point of price. Okay, so this becomes your level of resistance. All right, fine. So this is what is resistance, and vice versa would be your support. That is the level from where your buyers enter. Okay, a similar price, that is the same point of price. All right, fine. Now let's understand what are pivot points. So basically your pivot points first of all is an indicator. All right, so pivot points is an indicator which is nothing but your ready-made support resistance. Fine. So in this resistance and support which I have just drawn in front of you, first I had to spot the area from where the price was reversing. Okay, so I had to spot this area first. All right, and then I had to draw this line. Okay, so this is your handmade resistance. What is your pivot points? Pivot points are ready-made support resistance levels. Okay, so let's understand how to plot pivot points. So in Zerodha's platform, you go to studies and you search for pivot points. Okay, when you search for pivot points, you'll get this option. Just select it and fine, you'll get something like this. Okay, so if you just go back to the studies and select this pivot points, so in the settings you don't need to change anything. All right, so only thing which you need to know is that there are two types of pivot points, standard and Fibonacci. Okay, actually there are more types of pivot points, but for this course we'll be sticking to these both types. Okay, fine, let's understand from the standard first. Okay, fine. So basically these are your pivot points. Okay, so as you can see, this is, so pivot points are different for different sessions. All right, we'll understand that in a bit of some time. Okay, so basically what happens is that as you can see, we have 7 lines in a session. Okay, I'll just mark them for you. So this is the first line, this is the second one, this is the third one, fourth, fifth, sixth and seventh. Okay, so we have 7 lines. All right, these 7 lines are nothing but your pivot points. Okay, so basically these pivot points will act as resistance or support. Okay, they can act any. All right, depending upon where the price is. Okay, it's simple. If the price is somewhere here, okay, let's say, yeah, take this example. So price is currently here. Okay, so if your price is currently here, that means what will happen is that this is your resistance. Okay, and all these levels below it are your support. Okay, so basically I think you all must have understood till now what is the principle of polarity, right? So a principle of polarity says that once a resistance is broken, it becomes support, and vice versa, that is once your support is broken, it becomes your resistance. All right, the same thing is with pivot points as well. Okay, so currently your price is at this level, as we all can see. Okay, so that means you have one resistance which is above it and you have 6 support levels. Okay, so as I told you, pivot points are nothing but support resistance levels. Okay, these levels will act as support or resistance most of the times, not every time. Okay, so it doesn't mean that if there's a pivot point, 100% or always your stock will take resistance from that point. Okay, there's a 60 to 70% chance that the price will take resistance or support from a pivot point. Okay, fine. So this is the thing, that depending upon where the price is, you'll have as many support or resistance levels. Okay, so let's say the price was at this level. Okay, so if price was at this level, that means you have one support which is this. Okay, and you have 1, 2, 3, 4, 5 and 6 resistance levels. Okay, so depending upon where the price is, you'll have as many support or resistance levels. Why? Because of the principle of polarity. Now let's say that the price is at this level, but it goes on to cross the first resistance, something like this. Okay, so this is a bullish candle, this is the close. Okay, so now we have this and this as the support levels, and 1, 2, 3, 4 and 5 resistance levels. Okay, so these are pivot points. Okay, so these pivot points tend to act as support or resistance levels respectively. Okay, fine, let's move on. So basically there are two types of pivot points, that is standard and Fibonacci. Okay, so I'll just show you. So this right now what I have plotted is standard pivot point. If you just go back to the studies and select the pivot points again, change the type from standard to Fibonacci, you'll have the Fibonacci pivot points. Okay, so there's not much difference between Fibonacci and standard pivot points. Okay, so the Fibonacci pivot points also are almost the same. Okay, so as you can see there are 7 lines. Okay, and the same thing, the same principle of polarity, depending upon where the price is, it will automatically have those many support or resistance levels. Okay, so the thing is same, only difference is that the levels are different. Okay, so first of all let me tell you the naming convention for it. Okay, so as I told you there are 7 lines. Okay, the middlemost line, all right, is known as pivot point. The first line above the pivot point is known as R1, which stands for resistance 1. The line above it is called R2, that is resistance 2. The line above that is your R3, that stands for resistance 3. Okay. The first line below the pivot point is your S1, which stands for support 1. The line below that is S2, that stands for support 2. And the line below that is S3, that stands for support 3. Okay, so these are the naming conventions. Okay, the middlemost line is pivot point. The 3 lines above that are R1, R2 and R3 respectively, and the 3 lines below the pivot point are S1, S2 and S3 respectively. Okay, fine. The same thing is for standard pivot points as well. Okay, the naming convention is same. Okay, fine. The only difference between standard and Fibonacci pivot points is that the levels are different. Okay, so as you can see that R1 in Fibonacci pivot point is at 208.48. Okay, but if I switch this to standard, all right, you'll see that R1 is at 208.38. Okay, so there's a difference of 0.1. All right, fine. If you go to R2, if you see R2 in standard pivot points is at 210.92, as you can see here. Okay, now if I switch to Fibonacci, you'll see that R2 here is at 209.41. Okay, so the only difference between standard and Fibonacci is that these are different levels. Standard pivot points are different levels. Fibonacci pivot points are different levels. That is the difference between standard pivot points and Fibonacci pivot points. Okay, the naming convention is same, the use is same. Both levels or both pivot points will act as support or resistance. Okay, as I told you, not every time they all will act as support or resistance. Sometimes standard acts as a better support resistance. Sometimes Fibonacci pivot points act as better support or resistance. Okay, none of the pivot points always act as good support or resistance. As I told you in the beginning, that there's only 60 to 70% chance that a pivot point will act as a support or resistance. Okay, so it's totally your choice, it's subjective in this case, that which pivot points you want to use. Standards are well, they are good, and Fibonacci are good as well. So it totally depends upon you which pivot points you want to use. Both of them act as good support or resistance levels. Okay, only difference is that the point of price is different for both the pivot points, both the types of pivot points. Okay, fine. Now let's move on. So these are the two types of pivot points. Now I'll give you the formula. Okay, so for the standard pivot points, this is the formula. Pivot point is high plus low plus close divided by 3. Okay, okay, first let's, before going on to the formulas of both the types, let's understand the basic 4 types of pivot points. Okay, so the basic 4 types of pivot points are daily pivot points. Okay, then you have weekly pivot points. Okay, and then you have monthly pivot points. All right, and then you have the yearly pivot points. Okay, so these are the 4 types of pivot points. Okay, the daily pivot points change daily. Okay, as simple as that. So that means daily you will have new pivot points in the case of daily pivot points. Okay, so if I have to give you an example of daily pivot points, these are your daily pivot points. So in every new trading session you will have new set of pivot points. Okay, those are your daily pivot points. Okay, so as you can see, this is the trading session which started from 17th of November. Okay, and lasted for the entire day. Okay, this was the Muhurat trading, that is on 14th of November. Okay, we had different pivot points for that day. These pivot points are for 13th of November. Okay, So we had different levels for this day as well. Okay, so as you can see, every day the pivot points change. Okay, the levels change. All right, so these are the daily pivot points. Okay, and they are found on time frame anything below 15 minute. Okay, anything below 15 minute or equal to 15 minute, you can say anything below or equal to 15 minute. Okay, so as you can see, on 15 minute we have the daily pivot points. So if you want to switch to any other time frame, let's say 5 minute, okay, you'll still have the daily pivot points only, as you can see. Okay, so these are the pivot points for the 17th of November, these are the pivot points for Muhurat trading, and these are the pivot points for 13th of November. Okay, so any time frame less than or equal to 15 minute will give us daily pivot points. Okay, so that means they'll change daily. All right, fine. Let's understand the second type. The second type is your weekly pivot points. Okay, so what are weekly pivot points? Similarly, weekly pivot points change weekly. Okay, and they are found on time frames such as any time frame, I'll just write it down, any time frame greater than 15 minutes, okay, and less than 1 day. Okay, any time frame greater than 15 minutes and less than 1 day will give you weekly pivot points. Okay, so let's understand it with an example. So I'll switch to a 30-minute time frame. Okay, so a 30-minute time frame is greater than 15 minutes and is less than 1 day. Okay, so you'll see that on 30-minute time frame we have weekly pivot points. So just have a look at this. So this pivot point started from 9th of November and lasted till 14th of November. Okay, that is the entire week, the 5 trading sessions from Monday to Friday. All right, and from 17th of November we had new set of pivot points. Okay, that is from today. Today was the first trading session of the week. Okay, and similarly, if you see, you'll have same pivot points for the entire week. Okay, so they change weekly instead of daily. All right, so that's why the name weekly pivot points. All right, as simple as that. And you can clearly see how these levels act as good resistance and good support. Okay, you can clearly see how these levels act as good support or resistance. Okay, so that is the same thing. Fine, so these are the weekly pivot points. Only difference is that they change weekly. Okay, so this set of pivot points which you can see right now in RBL Bank, this set of pivot points will last for the entire week. Okay, that is till 20th of November, Friday. Okay, and from 23rd of November, that is from the next Monday, we'll have new set of weekly pivot points. Okay, fine. So these are your weekly pivot points. The next one is your monthly pivot points. Okay, so monthly pivot points are found on the time frame such as daily time frame. Okay, so it's like time frame anything you can say equal to 1 day, all right, or less than 1 week. Okay, so 1 day or less than 1 week. So even on time frames such as 2 days, 3 days, you'll see the monthly pivot points. Okay, so any time frame less than 1 week and greater than equal to 1 day. Okay, fine. So in this case, as you can see, this is the current ongoing monthly pivot points. So this started from 2nd of November, okay, and it's still ongoing. All right, so these pivot points have not ended. All right, if you see the last set of pivot points, you can see that it started from 1st of October 2020 and has lasted till 30th of October 2020. And from 2nd of November, we had a new set of pivot points. Okay, so these are your monthly pivot points. They change monthly. Okay, they change from month to month. All right, so they are called as monthly pivot points and they are found on the time frame such as 1 day. Okay, fine. The last set of pivot points are your yearly pivot points. They are found on time frames such as 1 week and 1 month. Okay, so on time frames such as 1 week or 1 month. All right, so what happens in this, the same thing, it lasts for a entire year. Okay, so as you can see, this current ongoing set of pivot points started from January, okay, and are still ongoing. All right, if we see the last set of pivot points, they started from January 2019 and lasted till December 2019. Okay, and from January 2020 we had new set of pivot points. Okay, so these are your weekly pivot points, sorry, your yearly pivot points. Okay, so they change year to year. Okay, if a new year begins, we'll have new set of yearly pivot points. Okay, fine. Now a very common question would be that, yes, which set of pivot points should we use? Okay, see, the thing is simple, that if you try to spot some support or resistance levels on a monthly time frame, okay, the normal, the red, not the ready made, not the pivot points, if I just remove this these pivot points, if you try to spot normal support resistance, okay, so let's say this is your support, okay, what I can see from here, that 100 is a good support for RBL Bank. It came down till here and reversed from here, okay. So how do you use this support resistance in intraday or in swing trading? You switch to any other time frame, let's say you switch to 15-minute time frame, okay, and you use that particular support as well for your trading, okay. So the similarly, in similar way, what you do is you select the pivot points, okay, you go to the yearly pivot point, let's say you go to the monthly time frame, you'll still get the yearly pivot point, okay. So what do? You use that similar pivot point for your trading, okay. So you can use this, let's say this is your S2, so I can use this S2 for my trading, or I can use this pivot point for my trading, I can use this R1 for my trading, for my smaller time frame trades, okay. So this is the, it is the same, that is the same support resistance levels, okay, only thing is that it is ready made, okay. So you can clearly see how they are often respected, okay, as you can clearly see how the price reversed from here, how price reversed from here, how it was taking support from this level, okay. So they are often respected, but again not always, okay, most of the times, you can say 60 to 70% of the times, okay. Fine. So similar way you can find pivot points on higher time frames and then use it for the smaller time frames as well, okay, to just to have a confluence of support and resistance levels, okay. Fine. Now let's understand the formulas, okay. So for standard pivot points, pivot point is equals to high plus low plus close divided by 3, okay. So that means high of previous session, low of previous session, close of previous session, sum it up and divide it by 3, okay. So if I'm talking about daily pivot points, okay, so in that case I'll be taking high of previous day, okay, low of previous day and close of previous day. I'll get the this middle line, that is the pivot point, okay. But if I'm trying to find pivot point in a weekly time frame, so in that case I'll be taking high of previous week, low of previous week and close of previous week, sum it up and divide by 3, okay. And similarly in monthly time frame I'll be taking high, low, close of previous month, okay. So that is how the pivot points are calculated, okay. So as we know that since this is an indicator, and what are indicators? Indicators are just your mathematical tools, okay. Every indicator has a mathematical formula behind it, okay. The same thing is with your pivot points as well, alright. Fine. So we have formula for each of the pivot points. For pivot point it is high plus low plus close divided by 3. For R1 it is 2 into pivot minus low, okay. R2 is pivot plus high minus low. R3 is R1 plus high minus low, okay. S1 is equals to 2 into pivot minus high. S2 is equal to pivot minus high minus low, and S3 is equals to S1 minus high minus low, okay. So this is the formula for standard pivot points, okay. For Fibonacci it is the middle line is same, that is pivot point high plus low plus close divided by 3, but the formula changes for S1, S2, S3 and R1, R2, R3, okay. As you can see, S1 is equals to P minus 0.382 into high minus low, okay. Now a question could come in, Yash, why only 0.382, why not any other number, okay. So basically 0.382 is a Fibonacci ratio, okay. So Fibonacci ratio is derived from Fibonacci numbers, alright. So that's why 0.382, and 0.618 is also your golden ratio of Fibonacci numbers, okay. So that's why 0.618 is used. So that's why they are termed as Fibonacci pivot points, alright. So support 2 is 0.6 pivot minus 0.618 into high minus low. Support 3 is equals to pivot minus 1 into high minus low. R1 is equals to pivot plus 0.382 into high minus low, and R2 is equals to P plus, that is pivot point, plus 0.618 into high minus low, and resistance 3 stands for pivot plus 1 into high minus low, okay. So these are the formulas for standard and Fibonacci pivot points, okay. Fine. Alright, so now we have, till now we have understood that what are pivot points and what is the basic use of pivot points, okay. So we know that these pivot points will act as support or resistance accordingly, alright, depending upon where the price is, okay. So what is the basic use of support resistance? To place your target and to place your stop loss, alright. So let's say for some reason you went long here, okay. So let's say for some reason you went long here, okay. The reason here actually is your piercing, alright. This looks like kind of a piercing. Let's just confirm it. So this candle closed at 206.4. This one opened at 206.4. Okay, so there's no gap down. So this is not piercing. Okay, but let's assume that you went long here for some ever reason. Okay, so if you have gone long here, all right, at this point of price, okay, then you know that this is your resistance, this is your resistance, and this is your resistance. Okay, so what you can do, you know that these three levels could be your target. Alright, why? Because price could reverse from here, okay, and you can clearly see how price was taking resistance from this level, okay. So there was a chance that price could have reversed from here and fallen down, okay. So we use pivot points for targets like this. Alright, let's take some other example. So let's say you went let's say you went in this example, so let's say you went short here, okay. So for some reason you went short here. Alright, currently we are not discussing the strategy, we are just discussing the basic use of it. Alright, so for some reason you went short here, and or you were short before it itself, okay. And so in this case, what can be your support? You know that this level and these three levels can act as support. Alright, so what you can do, you can keep your targets here, okay. So this is the basic use of pivot points, and similarly, you know, this is your resistance, right? So you can keep your stop loss above it. Alright, so that is how we use pivot points. Let's say for some reason you are planning to go short here, okay. So in this case, what you can do, you can keep your stop loss just above the resistance, okay, and keep your targets as this, or this. Alright, so these levels, similarly how we use normal support and resistance to keep targets and stop loss, similarly these levels can also be used to place targets and stop loss. Alright, fine. Okay, so you can use Fibonacci pivot points or standard. Both are not one and the same, but both are different. Okay, the levels are different because of the change in formula. Alright, but both equally act as good support or resistance levels. So it's your choice. Try them out, see which one acts as a better support or resistance, and use them accordingly. Alright, fine. So this was the basics of pivot points, how to use the pivot points and everything. Alright, now let's understand a strategy related to pivot points. Okay, the strategy is very simple. Alright, the strategy is called as sell at resistance and buy at support. Okay, so what do? We sell at resistance and we buy at support. Okay, but there's a catch in it, that we don't generally sell at resistance normally. Okay, if we see that the price has come at resistance, we sell. No, we don't do that. What do we do instead? We wait for a candlestick pattern. Okay, so in the case of selling at resistance, we wait for a bearish candlestick pattern. Okay, and in the case of buy at support, we wait for a bullish candlestick pattern. Okay, so at resistance we wait for a bearish candlestick pattern, and at support we wait for a bullish candlestick pattern. And if we spot one, we go long in this case, and in this case we go short after the occurrence of a bearish or bullish candlestick pattern respectively. Okay, fine. Now let's understand this with an example. So this is the example of escorts. Alright, so what we can see here is that in this case what happened was, this is your pivot point, right, and price is below it. Okay, so this level will act as resistance, right, and what was our strategy? Sell at resistance on the occurrence of a candlestick pattern. Okay, now what happened here? The price came at this level, okay, and made a bearish candlestick pattern that is known as shooting star. Okay, has it made a shooting star? Yes. Okay, always confirm it with the volume. Okay, the volume should always be above average in the pattern. Okay, so if you just look at this pattern, as we can clearly see, the volume is above average. Okay, so just 2 points. Okay, one is that make sure there's a pattern, there's a candlestick pattern. Second point, make sure the volume is above average. If these 2 points are followed, your entry is triggered. Okay, so what do we do in this case? We go short at this point. Okay, once the pattern is formed, we go short. We place a stop loss above this level. Okay, so as I told you guys, you can keep your stop loss above the resistance. Okay, so since you know this is the resistance, you can keep your stop loss just somewhere here. Alright, don't keep exactly at this level, just keep little above it. Okay, your targets can be this, or this. Okay, so we know we have 3 levels of support. So in this case, what happened? Target 1 was achieved, and even your target 2 was achieved. Okay, so this is a simple example of sell at resistance. Okay, what did we do? We wait for a bearish candlestick pattern. Okay, once there was a bearish candlestick pattern, we look at the volume. Was the volume high? Okay, if the volume was high, that is it was above average, we go short and place our stop loss above the resistance and keep our targets at support. Okay, fine. Let's understand the next example. So this is the example from BPCL 15-minute time frame. Alright. So again the same thing, what has happened here. So in this case this is your R2, right, resistance 2. Now what has happened in this case is that price was just below it. Okay, so that means this R2 will act as resistance. Okay, so what happened here, it came till this price and it made again a shooting star. Okay, which is a bearish candlestick pattern. So what do? We confirm it with the volume. Was the volume high? Yes, it was. Alright. So what do? We go short after the pattern. We go short here. Where do we place our stop loss? Just above the pivot point. So it can be somewhere here. Okay, this becomes our stop loss. And what are our targets? Our targets are at support. So this can be one target, this can be second target, and this can be third target. Okay, fine. So this is the same trade, same example, that is sell at resistance. Okay, like the example of the same strategy. Alright, not the same example, but the example of the same strategy. Alright, fine. Again the same thing. Shooting star, high volume, we go short, stop loss above the level, that is above resistance, targets at the next support levels. Okay, fine. I hope this is clear. Let's move on to the next example. So we have the next example in this case. Now in this case what has happened is that this is your R1. Okay, now in this case what has happened is it has formed a dark cloud cover. Okay, if I zoom in for you guys, you can clearly see that this candle has opened with a gap up. Okay, and has pierced 50% into the, more than 50% into the previous candle. So this is your dark cloud cover. Okay, and it is near your R1. Okay, now you can say that yes, it has not tested R1. Okay, then do we still go for the trade? Yes, you can. Okay, so in this case as well you can go for the trade, although it has not tested R1 in this case, but it is forming a bearish pattern near the resistance. Okay, so it is still fine, you can go for this. Okay, see, the only reason why I am saying to follow this strategy is because in this case your stop loss is very less, right? If you just look at this example, okay, as you can clearly see, this is your entry. Okay, and this is your stop loss. So your stop loss is quite less, whereas your target is quite big. Okay, so this helps us in following the risk reward ratio. If you take the previous example as well, this is our stop loss and this is our entry. So this is our risk and this is our target. Okay, so this helps in the risk reward ratio. Okay, so that's why this strategy, that is sell at resistance and buy at support. Okay, fine. So the same case here as well, this is our entry and this is our stop loss. Okay, so see, always prefer it near the resistance. Okay, I know this is a little far from resistance, but it can be still taken. Okay, only thing is that the risk becomes a little big, not that big, a little big. Okay, fine. So this would be our stop loss, here would be our entry. Okay, again the same thing, targets can be this, that is the pivot point, or anything below it as well, that is S1. Okay, and in this case what happened, our target one was achieved. Okay, so this was our target. Okay, so again the risk reward ratio, as you can see, it is almost near 1:1.5. Okay, which is a good risk reward ratio. Okay, fine. So always look at trades like this before taking the trade. Look at the risk reward ratio. If the risk reward ratio is favorable, then only go for the trade. Okay, so this strategy offers us the best risk reward ratio, that's why it's better. Okay, because we'll be going through the concept of, I think most of you would have gone through the concept of risk reward ratio. If you would have not, we'll go through in the next videos. Okay, so then you'll understand that higher the risk reward ratio, even the lesser accurate strategy will end up giving you profits. Okay, so that's why higher risk reward ratio is better. Okay, fine. Let's move on to the next example. So this is an example from M&M, Mahindra and Mahindra. Alright, so similar example. So this is your resistance, that is R1. Okay, again the same thing, shooting star near resistance. Okay, and it is with high volume as well. Alright, fine. So what do? We take the entry here, we keep our stop loss here just above the resistance and targets at pivot point or at the next support. Okay, so again the same thing, our risk is quite low and our reward is quite big. Okay, so this is our risk. Alright, and this is our minimum reward. Okay, our reward is can be this as well. which is very big. Okay, so in this case our risk reward becomes at least 1:4 or 1:5. Okay, I'm talking about this reward. Alright, fine, which was achieved as we can all see, right? Fine. Okay, so this was your sell at resistance. Next example is of buy at support. Okay, now what we can see here is that this is your support, right? This is S1. Okay, this will act as support, as we all know, since the price is above it. Okay, so what we can see here is that there is a formation of a inverted hammer, right? This is your inverted hammer, which is a bullish candlestick pattern. Okay, so what do we do in this case? It is with high volume as well, as we can all see. It is above average, volume is above average. Okay, so what do we do in this case? Same thing, we go long at this point, or we buy. Okay, place our stop loss below the support. Okay, and targets, target 1, that is your pivot point, and next resistance above it is R1, so that becomes our target 2. Okay, so in this case what happened, it went on to achieve our target 1. Okay, so the same thing, our risk is this much. Okay, and our reward is this much. Okay, so if I just clear all this, then you'll be able to see it clearly. So our risk is this much. Okay, so let's say you keep your stop loss here, and our reward is this much, right? So we can clearly see how risk reward is, again here is at least I think around 1:3. Okay, fine. So this is what we want, this is what we, this is what the professional traders aim for, high risk reward ratio. Okay, whenever you take loss, take less loss. Whenever you take the profit, take a big profit. Okay, that is how you can be successful in the market. Okay, so that's what you should aim for, and this is what this strategy offers you, that is less risk and high profit. Okay, fine. So this was your buy at support. Okay, fine. I hope things are clear till here. All right, try to follow this strategy and try to find some examples and go through it. Any doubts, you can always contact us in the group, which you'll be added in some time. All right, if you're not added to, then you can contact Devang. All right, and all right guys, thank you so much.